Good morning. Welcome to Trading with Larry. Ex Larry. Larry's not here today, so I'm joined by Mr. Clint Brewer. I'm Mr. Eric Shamilov. Hope everyone is doing well today. The market is doing exceptionally well today, and it has been since the Fed came out on Wednesday. I don't think anybody's actually talking about the Fed now, but people like Larry Fink are talking about a 12-month bull market up ahead. I feel like when they come out with these things publicly and make these kinds of public calls, I always feel like we're near or at correction territory, and the Nasdaq was at correction territory. Larry and I always debate whether we went into a correction, we didn't go into a correction. Depends what index you look at. I believe yes, we did, because I believe the entire market is centered around the AI trade. And I feel like and I want to talk to you about this, the broadening out narrative, where everyone was hiding out in the S&P 500 in July, as the Nasdaq is dropping 10%, more than 10%. So was that a real broadening out? So there's like a tale of two tapes. We have the Nasdaq, we have the S&P. What does that mean going forward? Do we just switch now to the Nasdaq? How long does this rally last? And today we're going to open up with the S&P at all-time highs, if the futures remain right here. So I'm going to kick it to you. People are getting bullish. The Bears are trying to fade it, and I think they're going to be frustrated all week. What do you think, Clint?
It's the start of the infinity rally. That's what I think. I'm gonna one up Larry Fink. Um, no, two things. One, yeah, there's definitely a broadening out. We closed out a trade in one ticker trader that we had put on several months ago in RSP. I know Larry's talked about that. It's the equal weight S&P 500. So instead of the cap weighted version where the larger companies by market value get a larger weight in the index, it just treats every stock the same. And as you know, the S&P is pretty much grinding sideways for July. The Nasdaq was just getting crushed, but RSP was making new highs. So I think some last Wednesday, RSP was at a new high while the Nasdaq had fallen 10% into correction territory. That's just so there's absolutely a broadening out, and that speaks to something we wrote about in Larry's e-letter, and that is return dispersion. So there's a really interesting chart that I included in there from Bloomberg. They did this study and they looked at how many, for any given year, how many weeks did you see a return spread of 10% or more between S&P sectors. So, if you kind of on any given week, you rank S&P sectors from the best return to the worst return, how many times did you see a spread greater than 10%? Because that's a huge spread, right? So something's, if there's that much of a difference between sectors, there's something going on under the hood. And we're barely halfway through the year, and we're seeing the number of weeks with that return dispersion jumping to some of the highest levels we've seen in the last like 25, 26 years. You have to go back to, years that stand out are years like 2020 during the pandemic, 2008, 2009, and then also during, kind of the peak into the internet bubble. So there's a lot going on under the hood. I think the key takeaway of it all is that I think this is a very risky time to be a traditional index investor. Like if you've been in QQQ or SPY for the last several years, you've done very well. But what's happening now is that the stocks that have pulled a lot, done their job to pull the indexes higher now make up a huge share of the index. I think the top 10 stocks in the Qs are like 55% or higher. So really you think you're diversifying by buying one of these index tracking ETFs, but you're getting some pretty concentrated exposure. And when it's working, yeah, things are great. But when it goes the other way, you have what happened in July. So you can be sitting there in the Nasdaq down 10% from the high, while you look at everything else is rallying. So that's the concentration in the indexes. Um, and I think you're going to see a lot more of that ahead. I think when you look at again when you look at years that saw high return dispersion, I would call those years of transition. Those were a lot of times those were years where you're transitioning from bull to bear. But just because at the index level, but that doesn't mean there's not going to be opportunities elsewhere.
So I guess I'll crystallize what you're saying in this chart, and I guess I get the reward for the first chart of the day. Our employers are paying us $1,000. Whoever puts up the first chart today, so I guess I take the prize. But here's the here's the EPS growth chart, and yeah, there seems to be a broadening out, and it's not just because this is a chart from Goldman Sachs, and I thought it really crystallizes this idea. Earnings have broadened out, and it's not just the other income line items from Amazon, Google, and Microsoft, which we saw in Google's last earnings report, myself included. Everyone's kind of looking at it like, wow, that's a high EPS number. And a big part of that was the stock gains from all the circular financing going on, right? Everyone's investing in each other, into Anthropic, into OpenAI. So excluding all that, we're looking like we're growing at a above estimate rate, and it's a pretty high rate um, historically. So my question is, if that is the case, we just saw a 1.5% GDP print, right? We just saw that. So that's a disconnect, isn't it? First
I
of all,
don't know because
just
you have
one
to
more
dig.
thing about that. Just one more thing about that GDP at 1.5%. Whether you believe inflation is 2%, 3%, or 2%, whatever number you choose, you take that out of a 1.5% GDP. I mean, are we actually growing? How is EPS going up like this?
Well, manipulated numbers like you're just showing. No, just kidding. They yeah. So one thing from that chart that was interesting is like the median stocks just plugging along, right? So I mean, the median stocks have been very consistent in terms of earnings growth, and you get a lot of the volatility variability around what's happening in really the Mag Seven names. But to go the earnings picture right now is supports kind of near term what's happening. And I want to talk. There's two things I want to talk about. I want to talk about a near term setup and something bullish that happened on the S&P 500, and then I want to talk about the longer term challenge that can face the market overall. And I'll start with the longer term because it comes back to your point about GDP. If you dive into the GDP numbers and you get under the hood a little more, what's really helpful to look at is this final sales number. So GDP, the quarter to quarter number can be variable based on inventory builds, inventory drawdowns, and what's happening with net exports. If you look at sort of this final sales number, it tends to be more stable. It tends to be a better underlying gauge of what's actually happening, with the demand picture, with the consumer demand picture. That's still been holding up really well. And the other thing that I saw this week that reinforces that notion that the economy is doing okay was the ISM manufacturing number the other day. That came out a couple days ago, I believe, and
Yeah,
or was it
pretty
yesterday? It was yesterday. So the ISM manufacturing number, has
awful
had
lot.
a big rebound for several months now into expansionary territory. And not only that, but the new orders component has been really strong too. That's important because new orders tends to be a leading indicator. But the other thing within that report is that the prices paid has stayed sky high. So that's an inflation indicator. So the challenge longer term is that if you have high inflation, which Warsh, in his last meetings talking tough on inflation, and you have this evidence that the economy's doing okay. That when the Fed was cutting last year, they wanted to, it was risk management cuts to get ahead of any fears over the labor market. But so far, you haven't seen really a big deterioration. And if some of these recent numbers hold up, and you dig into the GDP report and these numbers are holding up, with where inflation at, that's more pressure on the Fed for rates to hike rates. So That's the longer term risk in my opinion. And I think that played a I think that played a big role in the drawdown in the Nasdaq was that shifting rate outlook and the jump in the shifting outlook on the front end and the rise in yields you had on the long end. You know, the 30-year going out to the highest level since 2007. So that's the longer term challenge. Shorter term, it's my turn to share a chart now, and I'll show something that
You only get
I
$500
was
for
gonna
it.
say maybe we can split that. Maybe we can split that up. I didn't
No,
know
they're
that.
going to give you 500, and first chart reward is a
I didn't.
thousand.
I didn't know that coming into today. I'll keep that in mind next time.
Yeah.
So here's the S&P 500 and a continuation triangle that's something I was watching, and it's a continuation triangle because usually when you get these symmetrical triangles, they tend to resolve in the direction heading into the trend, which in this case was higher. But the one thing, and I'll try to zoom in here a little bit, the one thing that was really that's bullish near term, in my opinion, and I look for these a lot. It's a failed breakout or a failed breakdown. This bar right here, you had a 1 day breakdown last week of that trend channel,
Mm-hmm.
that trend line that was immediately reversed. When you get these kinds of breakdowns that gets immediately reversed, that can lead to some pretty powerful moves in the other direction.
And you better
And so
leave your opinions at the door whenever that happens.
yeah, and this it works the other way too. You can look for failed breakdowns, you can look for failed breakouts. So the key
So,
today will
like,
be
if that
watch. So
bar comes
now
right back
we're
in, if that bar
well,
comes right back in, would you consider that a failed breakout?
that would be so. Yeah, so that would be a failed breakout. Now, based on where like you pointed out where futures are at this morning, I mean, it looks like we're going to hold that level. But just, I mean, it's an incredible reversal off that failed breakdown
Yeah.
that's sending us right the other way. So near term, that's a bullish development. That's a positive for the S&P. I think that maybe this is the S&P, the cap weighted, catching up to what we've already seen with what's happening with the equal weight version of the index. That's good when the equal weight's leading the way because that means breadth is good. But that's really, I would say it's a bifurcated market right now in a number of ways. With trend sector dispersion that you're seeing under the hood and kind of the near term set up versus some of the longer term challenges that could come, especially from the Fed.
Yeah. I'm glad you talked about concentration and breadth because this to me is a big risk in the market. I know we're rallying right now, and you know these if you're unopinionated and you're just kind of looking for technical setups and leaning on that, and you've been buying over the last 3 days because these, and the longs have been like the easiest longs. If you're getting long, you're basically not getting stopped out anywhere, and it's just like ripping up, and it's enjoyable. But I think next week all this comes to an end because the overhang in the market is this concentration risk. Like we talked about earnings per share and we talked about GDP and we talked about the broadening out. I feel like the market is just truly AI. Like if AI slows down, everything else will slow down. And look at this concentration relative to previous bubbles. We're like right there, right? 41%. Um, that's I think that's a huge risk. So, what do you think about this rally? Is this going to be a short-lived kind of situation, or is this the Nasdaq now is trying to catch up and make all-time highs?
I think
Before you say, back in 2008, right around this time, we had a drop in the Nasdaq 14%. Right around July, in August, the Nasdaq goes up 12% after the correction, and then subsequently drops 50 over the next few months. I think it's going to be kind of like that.
I
So
yeah, I think what you're seeing is you had really strong performance out of the average stock, which no one, that's all the boring stuff that no one holds anyway. So no one's probably participating in it. They're in the exciting stuff, which was just getting absolutely crushed. And so now you're seeing Nasdaq. All the Nasdaq and this AI trade is doing right now is rebounding from a very oversold level. So just one chart I'll share here really quick is a high momentum basket. So this is a Goldman Sachs one of their baskets that tracks high beta momentum stocks. All right, so this is very speculative growth stocks, and these bars are the monthly returns going back to 1999. Last month was the worst month in history for that basket, worse than 08 or 09, worse than any time during the internet bubble bust. So these stocks were going to rally. I mean, these stocks are going to find a near-term bottom and rally from a very oversold condition. And that catch-up is what you've seen, I think over the last couple sessions, which looks like it's carrying through to today. And you can see that. I mean, look at some of these names like SanDisk. I think you guys were talking about SanDisk the other day. I mean, SanDisk from the late June high had a 55% drawdown. All right. And in a month, the stock lost more than half its value. And that's just, they've been kind of a poster child for that semiconductor trade. Or you go look at the Kospi index, or Samsung or SK Hynix, or whoever you want to look at. I mean, so what's helping the market right now? Yeah, these names make up a big weighting of the index, and they're bouncing from an oversold condition, and that's helping the Nasdaq some, but that's helping push the S&P out the new highs as well.
Yeah. So
my question to you, is there anything, so based on that chart I just showed, you've got, the worst performance in history on a 1 month basis. Is there anything in that trade that you'd be nibbling at right here?
No, I'm not following chips higher. There's so many other opportunities at play. I would say with last week at the lows, literally at the lows, Wednesday night, good friend of mine. He's not in finance, very far away from finance, but he trades. He trades a lot. He calls me up. This is where SanDisk closed at like below 1,000 that day, I think. The kid calls me up. He's like, I never traded options. I just want to know, how do I buy a SanDisk call option 200 points out? I look at the overnight, SanDisk is already up. I'm like, I know where this is heading. My retail friends are calling me. They want to buy AI stocks. You know where this is heading. And and by right at the open, okay, SanDisk is already at his target. I thought he was crazy. 200 points out, you're going to pay 7,000 for a call. He never actually had a chance to buy it because it gapped up 200 points more. So I think retail is in here. I think the market is conditioned to buy these kinds of dips. The way I'm, and you want to make money more than you want to be right. So you see the market going up. I rather play the index to the long side where I can, sell out of the money put spreads. I don't want to get into the AI trade right now. I don't think this is a generational buying opportunity. Let's put it that way.
Yeah, and I agree with that. I'm staying away from that trade for right now, and I don't know that I would be tempted to go into to short, because you never know how long these counter trend rallies can last for. But one thing I like to do is, when you're getting a bounce like we have right now, whether it's stocks or kind of across asset classes, is what looks like it's in a really weak position. What's been lagging what you're seeing, in various corners of the market. And I would argue that one area we have a short on right now. One area I would look to continue shorting is the hot trade before AI came along, and that's in precious metals. You talked about silver looking good before the podcast started. I actually wanted to share a chart of gold here really quick. And this is what I'm talking about, stuff in a weak position. I know, gold is not the stock market, but as we have, the price action in the market, gold is having a really hard time getting any sort of escape velocity off this 4,000 level. I mean, these bounces have been weaker and weaker. It's just been grinding sideways. The 50-day moving average is blue line. It's coming down to meet gold prices right there. So, I would, especially if we continue to, if we see a reversal in the dollar. That's the other thing. The dollar,
Has been weak.
since the since I was going to say real quick, just since the Fed, the dollar's been incredibly week, which should be a tailwind for gold. And gold can barely
Yeah.
get any traction off that. If we see
Yeah.
a reversal higher in the dollar, that's another catalyst to push this through. So I would, no one's really talking about gold or precious metals right now, but just given how weak these bounces have been, I would look for a breakdown below 4,000 here on gold.
Really? Yeah. Okay. I like gold here. I think.
I know
Yeah,
you
I
do.
think
That's
it'll
why I had to bring
explode
it up.
up. I think there's a lag to it too. Um, yeah, it is weird, and it has everything it wants: weaker dollar, um, rising yield curve. It likes that. The 2 years lower since the Fed. The 30 years higher. Like gold has everything it wants here, so I kind of have to lean on the factors historically that correlate to higher future gold price. So I'm angling higher. I also like so I look at I trade the Asian session a lot, right? And I see like where if the Asians are buying, if there's a trend where the Asians start buying gold and metals, that's usually a prelude to if it starts going. I haven't seen that trend yet, but I have seen it over the last couple of nights. A couple of more days, if I see the Asians start buying, I think I'm going to pile into gold. But yeah, so I think it has everything that it likes. One AI play that I am in, and I'll share that with you. Maybe this is a safer one. This chart, you got your moving averages are coiling. This is VST Vistra. I'm going to take this into earnings. I'm thinking we hit right around 180, something like that. That's my play. I have a deep in the money uh, put spread on this, hedged with a call spread that I put out about a week ago. So the call spread is basically zero at this point, and the put spread's in play into the earnings report. So I like doing these in the money condors because it just keeps you in the position longer. And this is where it's useful. So I like Vistra as a play on the AI trade. Um, Kind of like space.
And who are they? And they're like an independent energy provider, right? That's how
Yeah,
that's the play on AI.
that's exactly right. That is exactly right. So I figure, look, if the AI trade, if I'm wrong and the AI trade is just going to keep going and going and going, this chart should break out, and if it doesn't, I don't think it's dropping too much. So it's kind of a safe way to play it. Again, where I'm getting alpha to the long side is index. I'm just hitting the index right now. I think the time for long short was better in June and July, where you can go along one sector, short the other. Right now, I feel like the alpha from a long short equity portfolio is kind of gone because the entire index is moving now. It's not like yesterday you saw Micron begrudgingly go up, but you saw them still trying to sell it a little bit, but it still was green on the day. If this was a week ago, Micron would be down like 3-4% with the Mag 7s up 3-4%. So I feel like the better alpha to the long side is the index rather than trying to pick out, you know, I feel like the alpha from being long short different sectors is gone for now, just for now.
What do you collectively? What do you think about the Mag 7 in general? I was looking at that chart before the show. So you can follow the Mag 7 with the Mags MAGS ETF, and for all the talk, for all the hype around the Mag 7, still they've gone nowhere since October. So here's kind of the original peak back in October 2025. marginally took it out a little bit and then pulled back. But really, I mean, this entire time frame, we're going on 10 months of the Mag Seven again collectively as a group doing nothing, just grinding sideways. Do you think is this despite what if I read about them in the financial press, like I think everything's great and that the Mag Seven's doing incredible, but the reality is, again, they've struggled for traction. They're going nowhere. Do you think this is something that's tradable in the next couple months?
It's always trade. It's weird to group them together. So Microsoft just had a huge run up. I think there's a rekindling of optimism about software stocks. So my like Palantir is up on earnings today. So you're going to be seeing who's the CEO. I forget his name. Who's the CEO? So you're going to be seeing that. He's going to be. I saw him on CNBC. He was a little bit more toned down. He didn't look like he was on cocaine that much. I think his PR people told him, "Hey, people are saying you're high on coke. You got to tone it down a little bit." But I think there's a resurgence in software happening. So Microsoft just took off like crazy. Palantir's back, but then you have like Tesla, you have Google, and they're continuing the mantra of we're going to spend every last dollar on capex. At a time where you just saw Moonshot come out and be like, "Hey, we can do this stuff with much less compute." And we could be on par with Anthropic and on par with the best open AI model. So what I think is going to happen is more of that. You're going to have more competition up and down the AI supply chain. And you saw that in a microcosm the last 2 weeks of July. You saw that with Moonshot, and then there was the company, I forget the name of it, the Chinese company.
No, DeepSeek.
No. The one that introduced the capability of manufacturing uh, the chip making machines,
Oh, yeah.
right? So that's one part of the supply chain. The Mag Sevens represent the other part of the supply chain. So I'm looking at this whole AI trade like it has fissures both on the demand side and on the supply side. On the demand side, the enterprises are using AI. They're looking at it like, okay, there's a lot of hype. We were promised a lot of ROI. Where is it? So you're seeing like AI token prices tobogganing down. That's on the demand side. They're kind of like, whoa, this is a little bit too much. If you're an Anthropic, if you're a Claude user, I'm a Claude user. They just introduced a new thing where if I want to do any kind of serious project using AI agents and all that, I have to pay above my monthly subscription. So that's just a small thing, but for large companies, it adds up. So where's the ROI? So I think there's problems on the demand side. And then on the supply side, you have China consistently coming out with competition, which I think is going to just increase and increase and increase. So where's the Mag Seven going? I don't know. Yeah, we could rally, as the market is going to try to rally here and there, but I think the Mag Sevens are bifurcated themselves, depending on how close they are to the AI trade, how close they are to the on the software side. But I think there's issues both on the supply and demand side. And speaking of China, take a look at this chart. Everybody's talking about China. Elon Musk always talks about China. Everyone's like, hey, they're probably going to lead in the AI race at some point. ASHR, A shares, Chinese A shares look to be at an interesting spot here. Right at that 200-day moving average, I'd be looking at those for a possible catch up trade if the market wants to rally more. So it's kind of how I look at it here. Not excited about the Mag Sevens. So we got what's the straddle today? Let's take a look. I think last time I checked, it was what 30.
Very misleading yesterday.
Larry chewed my head off right here on the air. Like, let's wait until the straddle gets hit. Now we could do something. And you know what? If it's a 30-point strat, today might be a day where the straddle could be a little bit better, but the market looks like it wants to open up.
I'm guessing. I'm going to guess straddles between 30 and 35.
Yeah, 76.25 open. We got ourselves a 25-point straddle.
Yeah.
25 points out, so like a 76.50 call spread, 10-point wide. It's paying you. 10-point straddle at 76. 10-point call spread at 76.50 is giving you $1.50. 25 points lower, 7,500 put spread, 10-point wide. A 7,600 put spread, 10-point wide is also giving you around $1.50. So we've had 2 straight days of big moves. We're going to open up today. My rule of thumb after 2 days of consecutive big moves is the market is going to try to start consolidating, and maybe we start consolidating here at the open. So I'm paring back my directional bets here before the open, and I'm starting to look for the market to want to begin to churn. Maybe I'm a day early on that. I'm not sure the market is going to open up at an all-time high in terms of the S&P, so people might be excited. But uh, I think if we have another rip to the upside at the open, that would be a great spot to start doing iron condors, probably for the next couple of days. As that, after a big move, the market tends to consolidate a little bit.
Yeah, sounds good. And I would watch the same. The failed breakdown on the S&P I mentioned earlier. We've had a massive move higher off of that. Watch for now we're breaking that triangle to the other side. So watch just to see if we can hold those gains. If we fall back into the pattern, then maybe that's something you can trade to the downside. Other than that, like I said, the on this bounce we're getting in equities, I'm looking for just things that look like they're in a weak position. I know we disagree. I think gold's struggling for traction. I would maybe watch for that 4,000 level. If we were to start to break down there, that could be a short opportunity. And I've got a couple other trade ideas up my sleeve, but I'm going to save those for the next time I'm on the show.
All right. Have a great day. Good talking to you. We'll see you all again tomorrow, and good luck.